If you're 6 months into a California probate, I have good news for you. You're in the home stretch. Months 6 through 12 are about finishing, not starting. I'm Shanti Soarjono, a California probate and trust real estate specialist. By this stage, the personal representative is usually focused on four things: paying what's owed, handling the taxes, distributing what's left, and asking the court to close the probate. A simple estate often wraps up in 8 to 12 months. A larger estate, or one where the family is fighting, takes longer. Let's start with the creditor claim period, because that's the first thing to close out. That window generally expires 4 months after letters testamentary or letters of administration were issued, or 60 days after a creditor received notice, whichever comes later. Once it's closed, the personal representative reviews every claim that came in. Valid claims get paid. Claims that aren't valid can be rejected. And a creditor who simply didn't file in time generally loses the right to collect from the estate, with only limited exceptions. Next comes the final accounting, and this is the part families underestimate. Before the court will close a probate, the personal representative has to prepare a complete accounting of the entire administration. That means showing every dollar the estate received, any property that was sold, all the debts that were paid, the attorney's fees, the personal representative's own compensation, the court costs, and finally, what's actually left over for the heirs. It's tedious. It's also what protects you. Now, there is a shortcut. If the estate was administered under full authority and all the beneficiaries agree to waive a formal accounting, the court may allow a simplified closing. That can save real time and real money, but it takes everyone being on the same page. Now I want to talk about the piece that matters most if there's a house involved: the step-up in basis. When someone dies, the tax basis of the property they owned generally resets to its fair market value on the date of death. Let me show you what that's worth. Say your parent bought their home decades ago for $180,000. On the date they passed away, that home is worth $900,000. The heir's new basis becomes roughly $900,000, not the $180,000 your parent originally paid. So if the house sells right away for $905,000, only about $5,000 is potentially exposed to capital gains, plus the usual selling adjustments. Compare that to what the gain would have been without the step-up, and you can see why this rule matters so much. But say the family holds on to the home instead and sells it a few years later for $1,050,000. Now, the gain is measured against that stepped-up basis of $900,000, so you're looking at roughly $150,000 of gain before deductions and adjustments. Still far better than it would have been, but it's why getting an accurate date of death value is so important. That number follows the family for years. Let's talk about the tax returns, because there are 3 different ones people constantly mix up. If the estate earned income while probate was open, rent from a property, interest, dividends, the estate may need to file Form 1041, the estate income tax return. That's completely separate from your loved one's final personal return for the year they died. 2 different filings, 2 different jobs. Then there's Form 706, the federal estate tax return. This is the one that makes families nervous, and usually it doesn't need to. It's generally required only in 2 situations: if the gross estate exceeds the federal filing threshold for that year of death, or if the surviving spouse wants to elect portability to preserve the deceased spouse's unused exemption. And that second one can be worth filing for even when no tax is owed at all. Most California probate estates never owe $1 of federal estate tax because that exemption is very high. When it is required, a CPA or estate tax attorney should prepare it. Here in California, more good news: no state estate tax and no inheritance tax. But heirs may still face capital gains tax when they eventually sell, ongoing property taxes, and income tax on anything inherited that generates income. And on property taxes, I need to correct something families still repeat. Proposition 58 and Proposition 193 used to allow parent-to-child and grandparent-to-grandchild transfers without reassessment in many situations. Those are largely gone. For most transfers after February 15, 2021, they were replaced by Proposition 19. Now, an inherited family home may qualify for limited relief only if the statutory requirements are met. Generally, the heir using it as their principal residence. Inherited rentals, vacation homes, and investment properties are often reassessed to current market value. That change catches people off guard. Once the debts are paid, the taxes handled, the creditor claims resolved, and the accounting finished, the personal representative files a petition for final distribution. It asks the court to approve the accounting if required, approve the fees, authorize distribution of what remains, and close the probate. After the judge signs that order, distribution happens. Cash, real estate, vehicles, accounts, personal belongings, all of it goes out according to the will, or California's intestate succession laws if there was no will. The personal representative typically collects receipts confirming each beneficiary received their inheritance. Then the last steps: transfer title, record the deeds if real estate is being distributed, close the estate bank account, file the closing documents, and obtain the order discharging the personal representative. Once that discharge is signed, their legal responsibility generally ends. Here's the rough shape. Months 4 through 6, the creditor period ends and debts get paid. Months 6 through 9, the accounting is completed and tax returns prepared. Months 8 through 12, the petition for final distribution goes to the court. Months 9 through 12, beneficiaries receive their inheritance and a simple probate closes. One more time, this video is general information only. It is not legal, tax, or financial advice. I'm a real estate specialist, not an attorney, and not a CPA, so please talk with licensed professionals about your situation. And if you're finishing a California probate with a house involved, I offer a free, no-pressure consultation. I'm Shanti Sorjono, and you do not have to figure this out alone.